Let's start with the local unit. We're seeing these stronger levels on the dollar rand. On Friday, we went all the way to 7.12. And at the moment, we're holding pretty steady at 7.18. This, as we lead up to the MPC decision on Wednesday, the 9th of September, it's widely anticipated that the market will see a 60% chance of an interest rate cut of 50 basis points. And of course, it is the 9th of September that we will see that interest rate decision.
Yeah, Bronwyn, I mean, the rand's done extremely well on the back of heightened risk appetite. It was only last Tuesday that we were trading above 740. Subsequent to that, we've seen some relatively good data coming out across the globe, from Europe to America, to a lesser extent in Japan, and certainly in China. We had some good data, and that created some risk appetite. And of course, with the better than expected non-farm payrolls on Friday, the rand broke through what can be considered the key level of 720. And right now we're holding below that level, and we're looking towards the MPC on Thursday.
I was speaking to Simon Smollett from Credit Agricole last week, and he said from a technical perspective, we are headed for 6 on the dollar rand. Do you share those sentiments?
Well, I think there's a lot of water to flow under the bridge before we get that. I think certainly potentially, we can have a new handle of 6 on the rand pretty soon if everything sort of remains supportive. And I guess Thursday's rate decision will also be a key factor as far as that is concerned. Right now, though, I think we need to get decisively below 715. That's a support level coming through on a daily and a weekly level and a weekly chart technically. And of course, that then takes out what we've seen as a bull channel since going back all the way to 2004. So we're really at interesting levels at this point in time. I think if factors remain supportive, and certainly if the MPC's decision is to leave rates on hold on Thursday, then I can see potentially by the end of the week the rand trading in the sixes, in the sort of 690 area.
Do you think that if the MPC does cut by 50 basis points, it's going to prevent the rand from trading stronger? I mean, lately, when we've seen a cut on the local front, we've generally seen a very short-term move weaker on the rand, and then it's bounced back significantly. Is this not a blunt instrument on the rand, and whether they cut or not is going to make no difference to the general direction, which is stronger?
I think Governor Marcus is very prudent. She's not using interest rates as a tool to affect the exchange rate. But certainly, the rand's yields are still very attractive. And even if we cut 50 basis points, the data that we did see last week internationally points to the fact that rates around the world are going to remain close to zero for a long period of time. And it's arguable whether a 50 basis point cut will have any impact. In the short term, I think we will see a sort of knee-jerk reaction on the rand. But as long as the view is that rates around the world are going to remain at zero, South Africa, both as a commodity currency and as a yield play, will certainly remain attractive. I think the key, Bronwyn, is to see what happens to the bond market. If we don't get a cut, does that scare potential bond buyers away? And in fact, people that have bought heavily into the bond market, do they lock in profits? And does the bond market, do the yields move a little bit higher? So the key to that decision will be the reaction from the bond market and whether we see heavy outflows as a result of it from foreign investors.
David, let's quickly focus on the rand as a barometer of risk, because if the rand is going to go weaker from these levels, then we need a double dip recession to unfold and money to flow out of the local unit, given the fact that it is seen as one of the more risky assets. Would you say that that is the only downside scenario for the rand at this point?
Well, Bronwyn, I've been waiting for the rand's blow up for the better part of this year, and it's been based on that premise that we will see a double dip recession. The irony is, of course, that as long as global growth remains benign and interest rates around the world are going to remain at zero, and we don't see a heavy sell-off in equity markets, then of course the attraction for the rand is the yield play. What is needed, the only thing that will move the rand weaker quite quickly is if we see a heavy dramatic sell-off in equities very quickly, like we did in 2008. That then drives the flight to so-called quality into the bond market, the more developed world's bond markets. But as long as we see the kind of price action that we have seen in asset markets around the world, relatively steady state and sort of benign environment that points to lower rates for a longer period of time, that's actually supportive for the rand. So it depends how quickly these things materialize, and if they do in fact materialize, it's not necessarily so that lower growth internationally will lead to a weaker rand. It's more dependent on the speed of that action and how quickly that takes place.